Welcome back to the deep dive. So today we're looking at the standoff in the Caribbean between the U.S. and Venezuela.
Right.
But let's forget the naval ships for just a second. When you see the USS Gerald R Ford and 12,000 troops move in, we're not just watching a regional spat.
No, not at all.
We are watching a foundational stress test of the entire global economic system.
Exactly. The military deployment, it's really just a show of force. It's backing up economic policy. A blockade in everything but name, really.
Aimed at strangulation.
Total economic strangulation. So our goal today is to unpack the stakes. We're talking energy, currency, and, how this all hits your wallet.
Okay, so let's start with the paradox at the center of this. Venezuela has the world's largest proven oil reserves.
The largest?
303.8 billion barrels. That's, 18% of the global total? And
Yeah.
yet, its production has just completely collapsed. It's now sitting at only 700,000 barrels a day.
And the new sanctions, the ones from this November, they're designed to basically take that last little bit completely off the market. Well, first, they terminated Chevron's permit. That was the last legal lifeline for them. But the real weapon here, the real mechanism of warfare, is this punishing 25% tariff.
On who?
On any country that imports Venezuelan oil. So we're not just sanctioning Venezuela, we're now sanctioning their trading partners.
And that falls mainly on China and India. So they're facing this brutal calculation. A 25% tariff on their oil. If they don't play ball, China could face these massive retaliatory tariffs, risking over $500 billion in exports to the U.S.
It's an impossible choice.
$500 billion risk. I mean, that's not just economic warfare. That's mutually assured financial destruction for them.
It forces them to find alternatives. And if Venezuelan production drops even more, say by another 300,000 barrels a day, and these big buyers are scrambling,
Prices spike.
prices could easily spike to $120, maybe even $140 a barrel.
Yeah.
And fast, like within 9 months.
Wait, $140 a barrel? Wouldn't that kind of price hike just crush global demand, especially now?
It could, but the initial shockwave would still hit the consumer. Hard. Crude at $130 a barrel. That translates directly to you.
At the pump.
Exactly. The national average for gasoline will push toward $5 a gallon, maybe even higher in places like California.
So that brings us to Russia. The U.S. is spending, $8 to $10 million a day just to operate this carrier group. What does Moscow get out of this?
That cost is the strategic objective for Russia, tying down expensive American military assets far away from Europe.
Okay.
And after their new partnership, Russia can start supplying Venezuela with things like Oreshnik or Kalibr missiles, missiles that can reach the U.S. mainland.
So it's asymmetric leverage.
Pure leverage. And at the same time, it secures Russia a market for its own discounted oil in Asia, because China and India are desperate for a replacement.
Let's shift to maybe the ultimate financial weapon here, the currency itself. We're seeing sanctioned countries, Russia, Venezuela, Iran, they're all starting to accept Chinese yuan for their oil.
And this is where it becomes a systemic risk. The aha moment is all about U.S. debt.
Okay.
Right now, the dollar underpins about 59% of global foreign reserves. If that share drops by just, say, 10%.
Right.
That's $600 billion of global demand for U.S. treasuries that just evaporates.
And a sudden drop in buyers means interest rates have to go up.
They have to. You could easily see 10-year treasury yields pushing 5.5%, maybe 6%. And for you, that means a 30-year fixed mortgage could be heading toward 8, even 8.5%.
So what's the end game? Is it total collapse?
The most likely scenario is something more like a protracted frozen conflict, an economic siege. Russia and China, they'll provide just enough support to prevent a total collapse.
So the U.S. deployment just gets tied down indefinitely.
Exactly. The annual economic impact right now, military costs, lost trade, migration flows, it's already estimated between $40 and $70 billion.
And here's a final thought for you to take away. The U.S. recently designated key Venezuelan officials as part of the Cartel de la Soli.
Basically labeling them a foreign terrorist organization.
Right. And that means any company anywhere in the world that trades with Venezuela could now potentially face U.S. prosecution for material support of terrorism.
It's a massive, massive chilling effect. It goes way beyond oil and threatens to just cripple what little global trade Venezuela has left.